If you have ever taken a step to learn a new language, I believe you have at least once downloaded Duolingo on your phone. Yes, I'm talking about that green owl. But now, this owl teacher doesn't just teach languages, it also teaches math. Yes, you heard that right. In this video, we will analyze the Duolingo company in full detail, and by the end of the video, you will have at least one or two ideas about whether you should invest in this company's stock. But before we start the video, I want to mention that my videos are not investment advice. My goal is simply to keep you away from market noise, introduce you to new opportunities, and share my experiences to support you. If you want to see more videos like this, liking this video and subscribing to my channel is enough. So, Duolingo is one of the world's most popular language learning platforms and has recently shifted its business model more toward subscription-based revenue. The company also aims to expand into math and other fields. The Q4 financial results, announced in February 2025, show that the company continues its strong growth. Now, let's take a deeper look at this report. The current market valuation of the company is $16.5 billion, and in the last 5 years, its stock has appreciated by plus 168%. However, since the beginning of this year alone, the growth has been over 16%. These indicators confirm that Duolingo is an interesting tech company from an investment perspective. A 168% growth over 5 years is a strong indicator, showing that confidence in Duolingo remains high. When we analyze the key financial indicators of the Q4 period, we see a plus 39% increase in revenue, reaching $210 million. Additionally, the company's net profit has risen to $14 million, up by 16.7%, while its free cash flow (FCF) has increased by 83% to $88 million. These indicators show that Duolingo is not only increasing its revenues but also significantly expanding its free cash flow. An 83% increase in FCF means that the company is generating more liquidity and can invest in new projects. One of the most important aspects is that Duolingo is increasing its revenues while managing its costs. This is a positive signal in the long run, and I believe that anyone looking to invest in stocks for the long term should take note of this information. Duolingo's revenue model works a bit differently from many other companies we are used to. Instead of making most of its revenue from advertisements, it earns a significant portion from premium subscribers. When we examine the Q4 report, we can clearly see this. For example, while subscription revenue increased by plus 48%, monthly active users (MAUs) by plus 32%, and paid subscribers by plus 43%, advertising revenue grew by only plus 5%. In my personal opinion, it is much better for a company to generate revenue by providing a high-quality product that users voluntarily subscribe to rather than forcing them to watch annoying ads. This indicates that the company has a good marketing strategy and is also delivering a quality service. Now, I want to talk a bit about the company's margins. According to the Q4 report, Duolingo's gross margin is 73%, EBIT margin is 3.2%, net profit margin is 8%, and free cash flow margin is 42%. These figures show that Duolingo has a high gross margin, 73%, meaning that a large portion of its revenue turns into net income, and the 42% FCF margin is a very strong indicator. This means Duolingo is effective in generating free cash flow and could provide more value to shareholders in the future. However, there is one critical point to be aware of, which could be considered a red flag. The company's EBIT margin is only 3.2%, indicating high operating expenses. High operating expenses pose a risk because if an economic crisis or financial difficulty arises, a low EBIT margin makes the company's profitability more vulnerable. To cover its high costs, it must either attract more subscribers or reduce expenses, which could negatively impact the user experience. According to analysts' forecasts, by 2026, the company's annual revenue growth (revenue CAGR) is expected to be plus 28%, earnings per share growth (EPS CAGR) plus 41%, and free cash flow growth (FCF CAGR) plus 34%. These projections suggest that Duolingo will demonstrate strong growth in the near future. At the same time, the 41% growth in EPS means investors could earn more returns. Duolingo's stock is currently trading at a high valuation relative to its earnings, with a P/E ratio of 213. However, analysts predict that by 2027, the P/E ratio will drop to 65. Despite the fact that Duolingo's latest closing stock price was $312, analysts project that its price could reach as high as $425 in 2025 under the best-case scenario, while in an average scenario, it could be around $353. However, if things don't go well, it could drop to $200. In my personal opinion, Duolingo is one of the companies that could be successful as a long-term investment because such companies, which do not produce physical products, can scale their business more easily by reducing costs. However, it is important to consider competitors in the market, such as Babel, Rosetta Stone, and Google AI learning systems, as they are strong rivals. Nevertheless, I still believe that Duolingo is one of those companies that has managed to build a connection with its users and already has a loyal user base. At the same time, I think this Green Owl teacher, having established a strong connection with its students through language learning, could leverage this bond to succeed in other subjects as well. They have already expanded into the math sector, and in the future, there could be other areas as well. This means that the company is looking for different perspectives in the education sector and trying to fill gaps. In any case, this could lead to increased revenue. What do you think? I believe I have explained the Q4 report and my personal opinions in a clear manner. By the way, if you want to earn up to $30 in free cryptocurrency and stock rewards, be sure to check the pinned comment in the comment section. And for more videos like this, subscribe to my channel and turn on notifications so you don't miss any new content. Take care of yourself and always keep in mind, the $100 smart investment you make today can make your life 100 times better in 10 years.